From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 3rd, 2017. In a moment, we'll be taking a look at the USDCHF, the US dollar versus the Swiss franc, for today's trade analysis. But first, a recap of the trade suggestion made yesterday. Looking here at the GBP, USD Great British Pound, versus the US dollar, we were looking to go short into the resistance zone. Now that did work out in some ways. Let's go ahead and take a look at this on the daily time frame. You see the two black boxes up here at the top right hand corner of the trend. Let's go ahead and zoom in on those two black boxes. The previous one, the lower one, down here from last week, we saw 1, 2, 3, 4, 5, 6, 7 days where we were kind of stuck in a period of ranging. We found resistance at the yellow zone, support at the orange zone. Well, last week we were able to take a long opportunity at the orange zone and capture profit as it broke through the yellow zone and went higher. During that same 7-day period, though, we did recognize several days, of course, finding resistance at the yellow zone. So short intraday sells at the yellow zone may have been a possibility. Now we take that methodology, we bring it up here between the yellow and the green zone. And so far now, we've seen 1, 2, 3, 4, 5 days, including today, finding resistance close to the green shaded area and the 1.2920 level. So yesterday, we went ahead and took the short right around the 129.20 level, bottom of the green zone. Let's go ahead and zoom it on down to the 4-hour time frame so we can really get a handle on this. We took the short, and let me put a little arrow right there, right here on that candle, right there where the black arrow is. We took the short right there. Well, we had to endure a little bit of a push all the way up to 29.50, but eventually the market did pressure lower. We saw the market push all the way down here, about 35 pips of profit, and then suddenly turn back around and take us out of the trade at break even. If you've been around for any amount of time, you know that it's my strategy that if I see over 20 pips of profit, I move to break even. In this case, that was a good idea because it saw 35 pips, came up, and now it's challenging the resistance zone once again. Instead of go ahead and taking a sell again, we're going to wait for new evidence of resistance and reversal before we take a new short here for the GBP USD. Okay, let's move on over to the USDCHF. Now, one thing I need to mention before we get into the analysis here on the dollar franc is we have some significant news out of the US today that could change all the analysis for the day today. At 8:15 a.m. Eastern US time, about 30 minutes from the recording of this video, ADP non-farm employment change. If that's a significant deviation from the forecast, or they revised last month's number, we could see a significant move for the US dollar. Either positive or negative, but a significant move if it's a dramatic difference from the forecast or a revision from last time. So keep that in mind. 8:15 a.m. Eastern U.S. time, significant news. ISM non-manufacturing PMI at 10 a.m. today, and maybe even more important than that, FOMC statement and federal funds rate coming up at 2 p.m. today. So anywhere between 8:15 today a.m. and 2 p.m. Eastern U.S. time, we could see some significant volatility for the U.S. dollar. So keep that in mind and use appropriate risk strategies in all trading scenarios. Okay, here on the dollar franc daily time frame, we see the 1, 2, 3, 4, 5 different trends here. The black trend line, red, blue, green, black. So we've had basically 5 different trends for the first 5 months of 2017. So right now we're currently in the downtrend. The question, of course, of the day will be, will we see the continuation of the downtrend or reversal? It depends on some of that news today, I would say. The ADP and the FOMC depends on whether we see a break or a bounce. Let's go ahead and zoom it in here. So for the past 1, 2, 3, 4, 5, 6, 7, 8 days now, we've been stuck between the blue and the orange shaded area. So if you've been selling the blue zone, which we spoke about a couple of opportunities of that in the trade room over the past 2 days, if you've sold the blue zone, you've had profit back down to the orange zone and the 9,900 level. Now we're at support, and obviously the last couple of times we've been here, and here, we found support and bounce back up. So the question of the day will be, are we going to see it bounce off like it did here and here and go back up, or will we see it finally break through the orange zone and continue the direction of the trend? Well, we can't know that for sure until it actually happens, but we'll watch for evidence and clues to that. We'll watch the news, the ADP, the FOMC. If it's a positive sentiment or a positive move for the US dollar, we likely look for the bounce, the challenge of the blue zone, and if it's significant, maybe even a break of the blue zone and a turn back up towards the parity level here for the dollar franc. Now, if there's negative sentiment for the US dollar after all of that news and the market breaks down through the orange shaded area, we could be looking for it to tackle all the way back down here to the purple zone or lower. So we need to watch that news, see what the sentiment is. Now, the trade setups, what are we going to be looking for? Let's go ahead and bring it down to the 4-hour time frame and zoom it out one time. There we go. So what we're looking for is, first off, we'll watch the news and see what the sentiment is after the news. If it's a bullish US dollar sentiment, we're looking for the market to find support here at the orange zone, maybe dip its head back or toes back down into the orange zone before turning back higher. So we want to get as close as possible if we're going to take a long to the orange zone, because at this point, if you take a long, your risk or stop loss is underneath the orange zone. So that's the first scenario. If it's a bullish sentiment for the US dollar, we buy the orange zone, we target the blue zone or higher to the pink zone. Now, the other side of that would be a breakdown underneath the orange zone. If it's a negative sentiment after that news, we look for the breakdown underneath the orange zone. So what we'll be looking for there is a push under the orange zone and open and close. That's the strategy I use for a breakout, is an open and close under the orange zone. So basically what we're looking for is for it to break underneath the orange zone, and what I like to do is wait for the retest back to the orange zone. Why do I do that? Because our risk becomes smaller, because remember, at that point your risk is a break back above the orange shaded area, and then we look for the bounce back down to the purple zone or lower. So two scenarios. It either gives us clues to support and reversal to go back up with positive sentiment for the US, or we look for the breakout, retest, and sell opportunities on the negative sentiment for the US after our news today for the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.